This is Martin from Secrets, the channel for learning about trading and investing. Welcome to the markets next week, the weekly stock market analysis show, where we look at the technical charts and try to understand what exactly happened in the market during the previous week, and also plan for a bit of trade for the upcoming week that's starting from tomorrow, December 9th, Monday, 2024. So let's straight away go to the charts and have a bird's eye view on what happened. Look at this. The Nifty charts weekly is what you're seeing left on the right side. You have the daily. So you see that there is some kind of parallel channel and on both sides. Parallel channel is obviously both sides. Sorry about that, but yeah, I mean it's within two trend lines moving, and it seems to have taken support, and then might have halted the retracement that is happening since for 5 weeks, and seems to be heading back after a short correction, you can say, probably more than 11%. Well, on the right side, you see that there was a breakdown of the head and shoulder pattern, and now there is a breakout of inverted head and shoulder pattern, looks like. Right. On Banknifty, we see a ascending wedge that had been on the narrowing trajectory, and once again it just hit the bottom of that narrow ascending wedge and then trying to move up towards, and that's what you see, similar to what you see on Nifty, with the difference is that it's much more close to the previous all-time high in the case of Banknifty. While the daily charts of the Banknifty on the right side is showing that it's within two trend lines, I mean the parallel channel kind of, and seems to have taken support somewhere close to the 200 exponential moving average and bouncing up towards the top of the channel on the short term. That's a brief of that. But if you look at the numbers, Nifty had gained 550 points. That's 2.28%. That's a very big recovery, big and quick recovery that has happened last 1 week. Previous to it's the third week of recovery, you can say. After making 11.5% of corrections at the same time, the rally has been going on since June 2022. That's of 72%, and now it's only 11.5 retracement and a very quick recovery, especially this week. So the condition of the recovery is what I see in the Nifty. Well, Banknifty also remarkably recovered, much more better than Nifty, probably 2.8%, nearly 3%. That's 1,500 points nearby just in 1 week. That's outperforming performance with Banknifty. Remember, Banknifty had corrected much less than the major index, 8.6%. Normally, that's not the case. Banknifty usually corrects more as compared to the Nifty whenever there is no previous stints of correction. If you see, you can observe that. So that way, Banknifty is much stronger recovery, you can say, and much more closer to the all-time high in the case of Banknifty. So make note of that. Now let's look at the candlesticks patterns, and you see that it's a solid weekly bullish candle, very wide range bullish candle. See on Banknifty also, right? Very solid bullish candle. It almost fully engulfed the previous hammerish candle of Nifty, and almost fully engulfed the previous doji candle on the Banknifty. So that's solid bullishness in the candlestick, no doubt about that. And that's the third week of up move. Banknifty had a gap up previous week and then was in this, and then it was a big breakout towards the all-time high, and we are just 500 points away from the all-time high in the case of Banknifty. While Nifty has more space to cover, more resistance to face all the way, but yeah, Banknifty is driving the rally or the recovery. Now look at the daily candlesticks. Friday we had a small red candle, and it's kind of hammerish. It's a slightly longer wick, and small body is always indecisive. Of course, it will be indecisive after such big moves of nearly 600 points in the Nifty. Banknifty also has some profit booking may come in the small body again here, which obviously is indecisive after a mega rally of 1,500 points in a week. That's what the candlesticks of daily is indicating. But otherwise, if you look at the 5 days, look at that, it's a gap up and steady up move is what you see on Nifty and Banknifty also. 5 weekly candles, extremely bullish, no doubt about that. Right? And well, the bands, if you see the daily, you can see that it's an expansion depth side that's seen on Nifty and the Banknifty both on the short-term daily charts, right? So the contraction on the sideways movement is almost the beginning of the expansions that we see. So that's the same in Banknifty also. So usually, what can be learned, can be learned from that is that probably there's a continuation of the expansion of the bands and probably it's continuation of the rise up movement towards the previous all-time high. And it may not be that easy in the case of Nifty, but it's almost easily already done by the Banknifty figures. Hardly any more resistance on there towards the all-time high in the case of Banknifty. When Banknifty does that, Nifty falls. That's the candlesticks, no? Wide range bullish, weekly candles, so medium term absolute bullishness, Friday profit booking. That's it. Now all the moving average resistance is cleared now by Nifty and Banknifty, both of them. And as I have been saying multiple times, Banknifty is very, very close to the all-time high with 1,500 nearby points is what more last week. Right, 3 weeks of big recovery that has happened both days. Fans already talked about that. Let's move it. So we try to understand what is the momentum of the different indices on medium term as well as short term, and also try to see the trend. The trend can be learned. The trend indication can be learned from the ADX indicator and the momentum for the RSI. So left side you have the Nifty and the Banknifty, the weeklies, and the right side you have the dailies. So we see that it's climbed into the bull zones already in the case of Banknifty. Right, momentum has climbed to the bull zones, and the momentum is not at climbed to the bull zones, but heading towards that in the case of Nifty. That's the medium term view of the daily charts. We see that momentum and trend is already in the bull zones. Momentum is already in the bull zones for sure. We'll deal about that first. And small dip can be seen on the daily Fridays. It's profit booking, obviously. So that's the summary of it. It's Banknifty is still sideways, but heading towards the bull zones above RSI 60. Banknifty has already done that. It's bullish, absolutely bullish. Now the trend ADX is indicating that it's no doubt the crossover has happened already in the case of Banknifty into the bull zones. There's a slightly rising trend in the case of short term and slightly falling the bullishness in the case of trend strength in the case of Banknifty's medium term. But otherwise, Nifty medium term is all that is lagging. So the crossover is yet to happen, but otherwise, absolutely heading towards bullishness, you can say. Banknifty has already done that, Nifty is following that. That's where it is. Now, right side, the charts that you're seeing is that of the VIX, the fear and greed indicator. What it shows is that there has been a dip after the state elections and the Fed events and the RBI policies and all that. It's almost a small dip has happened, but that's not quite that low. It's 14. It's 14.14 actually. It's a small 2% of dip, and the previous week after the immediate week after the elections was much more dip, but still it's 14 is very close to the medium volatility range, not really low volatility range for the matter. So keep that in mind. There is some kind of fuel still there, and that's probably the Trump factor, the Trump tariffs and all that, how that would affect our market is what the probably having the fear and signs reflecting in the world index. Moving ahead, we'll try to understand the open interest. Open interest in the futures for the Nifty and Banknifty both are showing long build-ups, which is bullish, obviously. And the open interest of the weeklies of Nifty's December 12th expiry is showing the levels as we will see that in the next slide. But the put call ratios of the options for the Nifty is very close to the bullish, but not really bullish yet. 0.9. Anything above 1 is considered bullish, and 1.1 is the bullishness that you see for the PCL as per the PCL, but that's for the monthly expiry, not weekly expiry. Make note of that. Now, there are two ways of trying to understand, as I've always been saying, using the technical charts indicators like the Fibonacci, the previous resistance, previous lows, the exponential moving averages, previous resistances, and all these things. That's another way of trying to understand the levels of support and resistance with the open interest for option riders are looking at. So that's what is indicated below. So 24,000 is where the highest supports are seen, where the highest put writing is seen in that place, while 25,000 is where the highest resistance is seen, where the call writing is seen. Second highest put and call writing is at 24,500 and 24,700 level. So that's quite a wide range, all right? And so there's some speculations of a few more days for the weekly expiry to happen. Well, the years of Banknifty, December 24, the month end expiry shows a very wide range, obviously, because the monthly expiry 52,000 and 54,000 is where the highest put and call writing is seen. Second highest at 52,500 and 55,000, again a very wide range. So well, you see that, you see the levels, so 24 and 25 is where it is. And from the technical charts that you see here of Nifty and the Banknifty, you can understand that Nifty has a lot more resistances to clear before it touches the all-time highs, previous resistance zones, and marked at 24,672, 25,000, 25,070, 25,333, and then the gap resistance at 25,740 downside. Will have supports at 24,400, 24,330, 24,250, and the 24,000 and 23,750 are all either Fibonacci 50s, resistances, Fibonacci 38s, exponential moving averages as indicated. Those levels are mentioned here on the top. Right? Banknifty also similarly, very few resistances, so the all-time high resistance, let's say, so very, very close. And if in the case of hitting the all-time high, so the first resistance would be that 54,000 rounding number, then 54,500, then 55,000. That's how it is. So the downside could come in, and the first support could come in at 53, then 52,800 were the previous resistance, then 52,583 were the another previous resistance, then 52,160 can have the 200 exponential supports that can come in. Then 51,857 and then 51,422 with 100 exponential moving average is there, right? 200 exponential moving average is way down there at 50,000. That's 3,500 points away or more. So that's the levels. Those levels are indicated here. Make note of that. Correlate that with what the option riders are saying, and then come to a place where you can bet on the upside or on the downside based on the supports and the resistances. They're just indicative of the probabilities and not confirmations. Make note of that. Now we'll try to understand how the different sectoral indices has been performing. So it's all up mostly, right? It is up 3.65%. Look at reality, it's up 5.4% last week alone. And look at this, auto sector 2.5%, and metal, look at that, 4%. So big moves in all the sectors except FMCG, which is actually flattish down, 0.37% down. Right? Big to weakness we are talking about. Even pharma is up 1%. Right? So only sector that is trying to catch up is FMCG as per the last week's performance. But overall, if you see, IT is only sector where it's bullish enough, ripe enough for a longish bets. Others are all catching up because medium term has to climb from the sideways in the medium term. Many of this, right? So more the medium terms and the short terms are that bullish. That's the time when it is ripe enough, and IT is always sector as of now it's ripe enough for longish bets. That's how the sectoral indices. We'll see those charts of all these six major sectoral indices down here. So you see that it's medium term bullish, IT. Medium term sideways rising in the case of metal, and medium term sideways rising in the case of auto. Pharma sideways rising and climbing in the bull zones in the case of pharma, right? And FMCG, after a long good corrections, it has climbed after dipping in the bear zones, climbed back in the sideways, trying to recover and move further up towards the top of the trend channels. And real index also has taken support at the RSI 40 and the climbing and trying to go back to the bull zones with respect to the momentum. Right? Those are the charts. Observe that. Moving ahead, we're trying to understand how the major heavyweight stocks contribute maximum normally to the index. So HDFC Bank is first among that. Look at that volumes, beautiful big volumes breakout, and it is all-time highs, and then it's hit the top of that parallel channel. Also there is a rounding parallel breakout, right? Some retracement will come in now, but eventually the parallel channel breakout also will happen very soon, and that's the stock, single stock that that took the Banknifty into such a big, crazy big breakout. So absolute bullish HDFC Bank. ICICI Bank always had been bullish and remains there at all size 60. So bullish candle there also. ICICI and HDFC Bank absolutely bullish. Lions is what has got hit back, and now it's climbed back the sideways almost there. Seems to have found the bottom, and it's essential that it sustains at these levels. Probably that recovery of nearly 20% or something is done with, and then the Lions recovers. That probably was an opportunity to buy for investment. Idea is doing all this good. In fees, what do you see? There's a head and shoulder breakout possibility. Not a head, sorry, cup and handle pattern on the weekly charts. That breakout could possibly give 300-400 points for sure if it works out. So, or it could move down and then bottom of the channel and then takes its own sweet time to move up once again. But momentum is climbing in the bull zones. This is also absolutely climbing in the bull zones. There's a balance channel there. There is scope for it to go further up from here towards the top of the channel. Kodak Bank, as usual, has been moving zigzag up and down and sideways in a range. IDC has been correcting and it's sideways as of now. So what's holding the market is HDFC Bank, ICICI Bank, along with the IT stocks. That's what the heavyweight stock story is all about. And the broader market indices, the mid cap index and the small cap index, you see that it has recovered, and very quick recovery on the broader market as well. So look at that. It has almost completely recovered with the momentum, and then once again it's very close to the all-time high. Look at the small cap. It almost hit the all-time high last week. So a remarkable recovery in the mid cap and the small cap, which is very positive. For the bulls to hope that the markets can once again head towards the all-time highs, new highs. Right? That possibility can be derived from this broader market indices also. Let's move on and try to understand how the institutions performed last week. How did they buy? Yes, FIs seems to have paused, and after a very long time and nearly 12,000 crores of buying in the cash market has happened from the FIs, which is what we really require. Lee has also put some profit, and it's nearly 1,800 crores of buying that has happened today as also. So both institutions net to net has been big buyers, and that's how market moved like this, with 1,500 Nifty and 600 points of move on the Banknifty, on the Nifty, 1,500 on the Banknifty, sorry. Yeah, so the derivative side also net longs moved up the case of institutional participation. So institutions are doing good, at least hope that sustains. DS had been doing good always. They've been buying and then buying like anything, because mutual fund money, retail participation increases, and better in their hopes. People shifted their investments from FDs to share market during the last post-COVID time, and that money is what is holding the market from crashing, despite the fact that a lot of it been spent buying during the last couple of years, and still market did not correct more than 12%. Actually 11% max. So, but the fact is, FIs have stopped or paused at least the selling, and then instead have started buying. It's very positive. Let's move at global markets. We'll try to understand the US indices, the currencies, and crude oil and gold and all that. Interaction of these is closely linked to our markets. That's why we are studying that as well. Right? This market, of course, there is some red, 0.5% down against the Dow Jones, but Nasdaq is shot up 3% up and 1% up in the S&P 500. So still having the bullish momentum and very close to all-time highs, or at all-time highs in the case of Nasdaq. So that's very positive. The mother market is hoping and banging on all the reforms and all this that comes in from September, the new government in January. So the mother market moves up, then obviously emerging markets like ours, even if it impacts a little bit, there is an anticipation of the positive and negative ways in the emerging markets with respect to US markets, dollar index rising and all that. But still, when mother market moves, so the markets obviously also moves, because it's a foreign money that flows in, that contributes to the stock markets and emerging markets as well, right? So that's about the US markets. You can see the charts here. right? I started off the US market first before going to the currencies and all that. So yeah, it's a breakout. Very good rally. Some red in the Dow Jones, but Nasdaq has hit an all-time high. S&P 500 also hit new all-time highs, and steady rally on hopes of a reforms or economic recovery. Possibility of that happening faster after the Trump government is what will reflect the US markets. Now, let's get back to the US dollar index. It just some pullback has happened, but it had a remarkable 8% of move after the US election outcome came in. This week also it's kind of positive but flattish, 0.2% up. Momentum is sideways, slightly still sideways after having exploded and broken out to the bull zones earlier with respect to the momentum. So sideways and rising, heading towards the zone. So dollar index has been moving up. Small consolidation at the top. If there is a breakout that happens from here, this consolidation small, then it can really be bad for emerging markets. If it all further strengthens from here, much more. Downside, you have the USD INR currency pair, which is also moved up, but it's flattish 0.13, and it's all-time low rupee that you're seeing. 84.65 is what USD INR currency pair is trading it. There's a descending wedge, and the breakout has happened, and yeah, the dollar index, although it is not directly correlated with the dollar index breaks out, naturally the rupee also weakens, so the USD INR currency pair also moves up. So bullish momentum is rising, something that's not good news for emerging markets, that the devaluation of the local currencies will be a factor when the dollar rises. So it's a dollar dependent economy worldwide as of now. So it remains to be concerned. Hope that the central banks will do the necessary to keep that under control, so that doesn't adversely impact the economy that bad. Now, if you look at the crude oil, it has been falling in 67. Can you believe that? Crude oil is falling. Israel-Iran conflict and all this have cooled off a little bit, and crude has fallen. Right? That's good news for oil importing country like ours, but not good news for oil marketing companies. Gold, on the other hand, is also consolidating after a big breakout. Momentum slightly slipped and trying to hold on that more bullish momentum. But obviously, it is preparing for another breakout probably. The gold is hedging instrument, and whenever it makes new highs, probably it's time to book profits. But as of now, gold has been consolidating and then waiting while equity market is making all-time highs. Now that's about it, right? Dollar is rising, rupee is weakening. Crude oil is falling, gold is consolidating, US markets are at the all-time highs. So that's the global cues for you. Now let's get into some actionables. We have two stock picks for the next week. One is Bharat Electronics, which is easily give 1 to 2 RiskReward if the breakout happens from this flag. If this flag pattern breakout happens, then it can be 1 to 2 RiskReward for sure. Reasons for taking the trade: momentum and the trend as per the RSI and the PDX is indicating that it's climbing the bull zones with volumes, decent volumes. That's a long call on Bharat Electronics Limited. Now, on the right side, you have the State Bank of India, which is showing a bullish weekly candle with volumes and momentum and trend is in the bull zones back. It's a parallel channel, and there is enough scope for it to move on to keep RiskReward. Right. So that's two stocks, State Bank of India and Bharat Electronics, both on the long side. FNO strategy. The first time I am putting not completely risk-defined strategy, but still relatively safer with a less probability of profit. But that's the only way to make some money, to take some risk, but calculated risk and willingness to get out the moment you see that you have to book losses, right? So basically, it's a call ratio spread. So basically, you're selling OTM call options and backing up with the hedges of that quantity of ATM call options. That's a call ratio spread. So twice selling would give some better profits, but the problem is a very small loss if the market does not move. But if market ferociously moves up, which I hope doesn't happen, then we may have trouble. The only solution, if that happens, ideal solution would be to get out. Book loss, get out. The moment it breaches 25,500, as long as it's hovering between the 24,879 and 25,521, you're okay. Even if it falls down drastically, no problems. Book your losses, very small loss, and then get out. If it breaks out violently, you had trouble. As long as it does not break out and move slowly or sideways or does not move, it should be okay. Margin of requirement is less, but the probability of a profit is very less, and there is not 100% risk defined because of the fact that if breakout happens on Monday itself, another 1,000-point move or 800-point move, which obviously may not happen all the time, but there's a probability that it can happen. That way, you have a bigger risk. Otherwise, it should be fine. But it's not completely risk defined. Keep that in mind. So it's a correlation spread on Nifty weekly is what you're seeing there. That's about action numbers. Let's try to wrap it up. So market is attempting for the recovery once again. This is the second week that it's doing. Third week of recovery probably. Yeah, second week. And it closed positive, very positive, right? 2 to 3% of more. And Nifty corrected 11.5%, more than what Banknifty corrected, 8.6 only. But we had a very bullish rally that is ongoing since last 2 years, 72% rally in fact. Keep that in mind. Now Fed supposes selling after the Fed policy and started small buying. Hope that persists. And has picked up, trend has picked up. In fact, Banknifty has crossed over the bull zone in the medium term, but Nifty is taking its own sweet time to do that, catching up with the Banknifty. But yeah, obviously it will do that. This is what it looks like. Now let's try to bucket the factors in favor of the bulls and the bears. So the fires have paused the selling last week, and DI money continues to flow in. It's very possible. Using dials of green still, and not very far from the all-time high. It's mother market, and then it's monster. All the dices have cleared the moving average, 20 exponential moving average, and all the other 50, 100, 200, everything. So that's very positive. Futures are showing long build-up, which is bullish. PCR is also very close to 1, and that's bullish. And candlestick patterns are green. Our weekly candlestick, if it's green, and price action lower high is all history in the case of Nifty, and bullish back. No price action patterns heading towards higher high, higher low, right? And all demands are expanding upside, which indicates more moves slightly. Heavyweight stocks are climbed back to the sideways. Sectoral indices are climbed back to the sideways. Global market indices are very close to the all-time high once again. Quick recovery in the case of that. So it's all positive. Now, what is in favor of the bears? The buyers have been heavily selling 1.5 lakh crores or more in the last couple of months, and there's no guarantee that they would go back to continue to do that after this pause. You don't know. It's a risk. Nifty is not yet bullish with respect to the momentum and the trend. In the medium term, it is yet to do that. It's very close to that. It's sideways and rising up, but not done that like the Banknifty has done. Right. So that's still in favor of the bears. And in the weeks, it's not really cooled off. It's still at 14 plus, which is medium term and not low level. Right. So there's some element of fear that's still there. We'll keep that in mind. So refrain from taking long positions and install tight stop loss, all that we can do, because there are some Middle East crisis, tariff plus the US elections, after the US election tariffs and all that. Could be the factors that could create some volatility. I always keep that in mind whenever such unpredicted things like war or pandemic that happens, and all the technical analysis, which is nothing but study of the probabilities, that goes for a toss whenever such events happen. So keep that in mind. It's not a foolproof system to learn the charts and trade on it. It's not foolproof. There's always an element of risk. Keep that in mind. And for the next week, 24,000 and 24,500 is the level that I have for the Nifty. Nifty is a wider range of 50,000, 54,500. Last time it's 26,000 and 54,000 levels are maintained. Probably we are heading towards the next leg of the rally. So all that we can do is hedge our positions, hedge our portfolios, no matter what. Protect your capital is all that you have got. Also, using hedge, you can also make money with hedging strategies and options, rental incomes with indices and all that. Check out the strategies in the playlist. A lot of option strategies that explain that. Check out the playlist and watch that as well. That's all I have. And if you like the content, you can subscribe and share with friends and give me feedbacks and then like if you like it. Right? I'm active in the Twitter, or I'm active in the X on regular basis, technical analysis and all that. So if you want to subscribe right as well, you can do that. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.